Well, the statistics are scaring, and of course, the data is right. That almost 2.1 million Kenyans are facing starvation. The situation is dire, especially in arid and semi-arid areas. The question is this: what are we doing as a nation to ameliorate this situation? That will form our conversation later on. We are focusing on drought in this country and the food security, and I'll be engaging a team of experts on what we need to do in a bid to deal with this kind of a crisis. But before we get there, we also have some conversation around data. Data is the new oil, and it is the future gold. And so everyone is rushing to amass as much data as possible. And the question is, what are we doing as a country to try and safeguard your data? There is a law in place. But you know what? According to some very interesting statistics from Ernst & Young, this was released this year, about 41% of companies in Kenya managed to share your data to third parties without your consent and with total disregard of the law. Some of them did not actually know that there was a law that exists to deal with these issues. The question is, how safe is the data that you give out? This is BizCheck, where we discuss serious stuff that matters to you. My name is Kimani, and of course, as usual, we have our team of reporters in the field trying to track the happenings in your county. For us to shift gear and of course discuss other things in regard to data, governance of data, the security of data, the sanctity of data in this country is a critical discussion all over the world. How do we secure the data that is in the hands of regulators, of government and other entities? And that is a question that we also want to pose to our expert in the studio this morning. And of course, we're joined by Mr. Getenga. He's the CEO of Credit Information Sharing Association of Kenya. Thank you very much indeed for finding time to be with us here. First of all, help us understand, how are we sure that the data that we share with third parties, with second parties, is secure and it's safe and it is well taken care of?
Thank you, Brian. That's exactly why government thought we need to find a solution to this, because there is no way for an individual like me who provides data everywhere I go for security purposes, for transaction purposes. I do not have a way of establishing how well is my data protected, to whom is it shared, how is it analyzed, is it in my interest? And because that question is really a prevalent question, it is a relevant question, government found it necessary to establish a law strictly to answer that question, and on behalf of us consumers to ensure that our data is protected and used in our interest. Yeah.
And that's how the law came into pass, the Data Protection Act of 2019. But we still have instances whereby there are massive issues of data breach in many institutions. Is it that we have not yet secured the data that we have, or this is just a question of being reckless?
Well, everybody is looking for that data, even sources that may not be valid data, valid sources, authorized sources. The world over, there are data breaches because people are trying to mine that data that is probably even authoritatively accessed, but unauthoritative sources try to reach it. And so they become very crafty in how they get into the systems of properly and official sources of data. And yes, there is a problem, because even in very developed countries you find major breaches of data. And that's because, as you said earlier, data is gold. It is the gold of people who are trying to market, people who are trying to come up with products. And so it is so valuable, and that process has not been fully. In Kenya now, with the Data Protection Act having been established just recently in 2019, not everything has been put in place. So its operationalization has not been fully made possible. The Data Commissioner was only appointed in November of 2019.
of 2020.
Of 2020, after the act was published in 2019. So really we can say it's not yet a year, but fortunately a number of processes have been put in place, regulations have been drafted, guidance notes have been issued. So we see the journey is actually beginning, and we can expect a lot more sanctity of our data going forward. Yeah.
And the most unfortunate thing is that, yes, there are steps that we as a country or the regulators are putting in place to ensure that data is protected and the sanctity of data is safeguarded.
Yes.
But it's quite unfortunate because, scammers and criminals, they're not... They are way much ahead of regulators. They are way much ahead of security agencies. Yeah. So even as we put safeguards in place, how do we accelerate this process?
The first step towards accelerating this process is to register every data processor. Because, scammers know where this data is, and yet the regulators don't. So when we register anybody who accesses data for purposes of processing it, let's begin with the one who actually instructs the processor to process this data. They are called the data controllers. So those must be registered with the data commissioner. The data processor must be registered with the data commissioner. That's the first step to ensuring that at least we know exactly where this data is sitting. And then when regulations are issued, as they are being issued now, it is now possible to tell which particular person or organization is processing data in a manner that needs to be protected. So first thing is safeguard the environment, the ecosystem, establish who is doing what, and then now when we put in place these measures, they are targeted at very specific people. Yeah, and then the second thing, of course, is now once you have registered them, now is to assess, first of all, the impact of what they're doing, the impact of what changes they are making to their systems, and educate the consumer, the person, the individual whose data is being processed, so that they too can enforce some accountability. So one of the requirements of the Data Protection Act, for example, is that the consent of the individual whose data is being processed must be properly obtained. Yeah.
As an organization that brings together credit information sharing platforms.
Yeah.
Recently, I think that was about 2-3 weeks back, you developed a code of conduct, to regulate and to ensure that credit sharing among creditors, data sharing among creditors is well guided. How many members have so far opted onto your platform?
Well, the credit bureau environment in Kenya, which you have referred to, is where all lenders put their data. And so we can say that the lenders here are controllers of data. Then the bureaus, and we have 3 bureaus in Kenya, credit bureaus. Credit reference bureaus. They are what you'd call the data processors now. And so all commercial banks in Kenya today are by law required to share our data as individual borrowers with these credit bureaus. So those are already 40 or so lenders. Then again, by law requirement, all microfinance banks, the regulated microfinance institutions, and there are 13 of them, are by law required to submit data to the bureaus. And then we have many SACCOs, licensed SACCOs, unlicensed SACCOs, and licensed microfinance institutions. And in total to date, we have 2,300 entities, around about 2,500 entities that are submitting data to the credit bureaus. Not all of them are members of our association, and that is why this code of conduct was launched, because then when you do not subscribe to particular regulations and you are allowed to submit data to the bureau, then nobody is really overseeing how exactly you are doing that job. So as CIS Kenya, we have been empowered by the regulator, the Central Bank of Kenya, to ensure that the data that is being submitted by all these 2,500, and the number is growing by the day, that they subscribe to the kind of requirements that the Data Protection Act, for example, requires of us.
So you're talking about 2,500 institutions that are supposed to share data or credit data to Credit Reference Bureau. And one would imagine that's a lot of data, I mean, in the hands of three institutions. But have these institutions, the three institutions, the CRBs, have they been audited to ensure that there are no loopholes, there are no gaps in the way they handle this information? Because it is a lot of information.
It's a lot of information, and I agree that talking about 2,500, and that number is growing. We expect that, the circles, for example, that are not regulated, that are joining on every month or every so often, new entrants are coming in, the microfinance institutions, then the digital lenders are also numerous. As this number grows, and we can expect it to exceed 10,000, 20,000 in the coming days, these are lots, this is a lot of data. So the first measure that was taken to ensure that there is proper control of the processes in the credit bureaus is to require that nobody will act as a credit bureau unless they are licensed by the central bank. So the licensing process the central bank undertakes and has made it so tight that not everybody can be a credit bureau. So if you and I today decide we want to be a credit bureau, the rigors of entry into that market are so tight that it won't be easy. So we haven't had serious breaches of data protection in our three bureaus in Kenya, and thanks to the regulatory role of the central bank, it has put in place very, very strict controls for who can be a credit reference bureau, what kind of systems are in place, how do they process their data. The central bank is familiar with the systems, and when they are making changes or introducing new products, those products are reviewed and assessed by the central bank. So that's a critical function of the regulator.
And of course, I mean, the code of regulation that you developed as an association, I mean, it has the blessings of the Central Bank of Kenya. But we're still awaiting the enactment of the CBK Amendment Act to bring on board more players and to ensure that information around data is well defined. So as we sit now, I mean, what are the punitive measures that are in place amongst your players to ensure that there is compliance?
Very well. The central bank controls a certain set of credit providers, the licensed banks particularly. And so it's so that this space is growing so much. There's so much enthusiasm by everybody who is lending to join the Credit Reference Bureau that the central bank realized that their mandate may be constrained. And so who is going to check all these unregulated credit providers who are joining the mechanism to ensure that their data is, the consumer's data is properly channeled to these bureaus and is properly utilized? And so when this code of conduct was established, it was because the central bank wanted to delegate this responsibility to our association and say that for unregulated credit providers, you shall be responsible for ensuring that these systems are in place. And so we developed this code, and now the central bank has said that anybody who is unregulated must sign up to this code so that we can then follow up to ensure that everything we have prescribed, and there are very many requirements in that code, everything we have prescribed, we shall be responsible to ensure that it happens. That means that anybody who doesn't sign up to the code is therefore declaring that they are not prepared to be transparent, they are not prepared to observe best practices in data sharing. And so really, the first step is that if you don't sign up to the code, then you are out of the system. That's the first thing. Then the second thing about punitive measures to ensure that this code is implemented, we are setting up structures.
But even before we go to the punitive measures, I mean, look, Central Bank of Kenya is a legal entity, I mean, created by an act of parliament.
Right.
The Credit Information Sharing Association, of course, it's not a legal entity. I mean, it's not created by any act of parliament. And so when you say that, you know, CBK has mandated your association to bring on board accredited information sharers, I mean, how does that arrangement work?
Yeah, that's a very good question. What's the legitimacy of our association?
Exactly.
It is a legal entity. That's the first thing. CS Kenya is a legal entity, but you are right that it is not established by an act of parliament. It's not a body recognized in law by regulation, by regulators. But this is what we had to do, what the central bank had to do. Last year, the central bank amended its regulations and required that it will have a code of conduct issued by industry, and that code of conduct must be approved by the central bank. And so through that amendment last year of regulation, it opened a room and provided an opening for an entity that is an industry body to develop a code of conduct that will be assessed for its completeness by the central bank. And once it approves that, then it empowers one body through that regulatory process to be responsible for this. So we submitted the code of conduct and it went through a thorough review process by the central bank, and based on that provision of regulation, that approval was granted to us. So there is a legal solution to that matter.
But still, though the amendments of the CBK Act, I mean, you know, brought about the issues around, you know, incorporating other stakeholders, you know, like the Kenya Bankers Association, and so much, to develop codes of conduct, you know, to regulate them, to somehow self-regulate themselves. But still, as an association, I mean, the much you can do for any institution that is not willing to join or to adhere to the code of conduct is to report the same to the Central Bank of Kenya.
Yes, and internally we also have measures because as an industry body we also have our own internal processes. For example, if we need to we can report to the central bank, and the central bank has powers to remove such a person from participating. But internally, before we go to the central bank, we have a committee of industry players. And I would like to say that it's really a privilege for CIS Kenya, because this has not happened for any other entity for the central bank to enforce through this industry system. And so we are fortunate to have in our membership at CIS Kenya the Kenya Bankers Association as a key member of our governing council. So the systems are in place that can ensure that the industry itself, using a committee that reviews regularly the reports of what goes to the credit bureaus, is able to do some industry self-regulation by requiring certain actions over time with time-bound requirements for the time being before we go to the central bank for action. The central bank, apart from its ability to withdraw approval of any entity to submit data to the bureau, also now last year introduced penalties that it can impose even prior to removing an entity from submitting data. So I think a lot more has been put in place. Third-party credit providers who are not regulated by the central bank now can be penalized financially for any action they do. And besides that, there is now the Data Protection Commissioner. The Data Commissioner, the Office of the Data Commissioner, Data Protection is possible now. We can work with the Data Commissioner as well to ensure. So we have multiple channels of ensuring compliance with the law.
Because the Central Bank of Kenya, because of its long history, I mean, it has well-defined rules and regulations, you know, on how to deal with these. But you know, when you go through the Data Protection Act, a lot of powers and regulatory platforms, you know, are vested within the purviews of the Office of the Data Commissioner, and that is where fines like if an institution is in breach of data, they are penalized, to the point of almost 4 million, 5 million shillings. So what is the collaboration between your association, the Central Bank of Kenya, and the Office of Data Commissioner?
That's a good question. There is absolutely a necessity for these entities to work together because the Data Commissioner has come in late in the day. The credit bureaus were licensed before the DPA, the Data Protection Act, was enacted several years before. And the central bank, through regulation, already has control over how things happen with the credit bureaus. But now with the Data Commissioner having come in, I see enhancement. There are things that the Data Commissioner requires of these data processors that the central bank did not require.
Yeah.
And so we see an enhancement of expectation and therefore a need for collaboration. We have already reached out as an association to the Data Protection, the Data Commissioner, to the Office of the Data Commissioner, and we have agreed that there is going to be collaboration. So then the entities between the Data Protection Act operators and the central bank, that is already an established, both of them are acts of parliament, and so they are definitely going to talk to one another. We find ourselves in a very peculiar situation where, as an association that is recognized now by the central bank and that will work with the Data Commissioner as well, the three of us will form a working arrangement that will ensure that when it comes to credit information sharing, the expectations of both the central bank and the Data Commissioner are harmonized and enforced.
You see, when you go through our Data Protection Act, I mean, it borrows a lot from the European Union law on general data protection, and of course, it has laid out very punitive measures, to ensure that third-party organizations or entities do not handle data they are not supposed to handle. But we have a situation whereby even political parties, they have your data, I mean, without your consent. The other day, there was a huge uproar in the country when people woke up and one day you find yourself you are in a certain political entity, you belong to this political party and so much. As people, what our remedial measures can we take? I mean, when we sense and when we feel that there is a breach in terms of the data by other entities?
Yeah, the Data Commissioner has established a reporting system. I don't know whether they are going to have offices across the country, but at least at the interim, they have established a system on their website where if you are offended in any way about your data and the way it is being handled, you can log on to the website of the Data Commissioner and you will post in your complaint. It is well structured and the timelines have already been established upon which that process will be done in terms of investigation. We must admit this is a mammoth responsibility. The Office of the Data Commissioner will have to expand in terms of its capacity and competence to be able to handle complaints that come from so many sources, and you have given just an example of the political environment, but there are many other examples. There is health, for example. My data is sitting with different hospitals. It is sitting with the insurance companies that are supporting the health services. It is sitting in supermarkets where I have a card and I'm shopping, and it is taking my data and it is analyzing my consumption patterns, and they are using that sometimes to market to me, and I might complain and say, look, I didn't expect this kind of marketing when I took this card in order to get my points. And so I can imagine a wide range of complaints that will fall with the Data Commission, and I think they are competent and they are putting in place very strong measures to be able to address the wide array of complaints that they will receive.
And of course, some of your members in the Credit Information Sharing Association are digital lenders.
Yes.
And in the past, they have come under heavy criticism, for accessing data and, of course, using it to coerce people, to borrow money, at exorbitant interest rates. So what are you doing to ensure that, rogue, if I was to call them, or entities or credit digital lenders who are in possession of customers' data illegally, they regularize the actions?
That's a good question because it touches on very, very many Kenyans. So many of us are using the digital platforms, our mobile phones, to access credit quite conveniently. And so we must admit that to begin with, the popularity of these digital lenders is an attestation of a value that they really give. You wouldn't have such widespread use of digital credit if it wasn't really helping Mwananchi. So I think the positive side of this digital credit is that it is solving a lot of, Mwananchi needs in a very convenient way, from the comfort of their locations, wherever they are. They don't have to go to a brick and mortar place. So there's a positive thing about this innovation, and it has really enhanced access to credit. It has enabled people to solve problems at very short notice, be it school fees, be it hospital bills. So there is a very positive side to it. Now, because of the concerns where some rogue digital lenders began going out of their way, out of best practice and ethical ways to collect this debt credit that has been granted, the first thing that happened is that the industry itself, the digital lenders themselves, established an industry body, the Digital Lenders Association of Kenya, which began to scrutinize who really is doing good practice, who is not. And if you are not doing good practice, you cannot be a member of the Digital Lenders Association of Kenya. And so we must applaud the DLAC, as they are called in short, for taking the first steps outside of regulatory space to kind of put their house in order. Now, they can't do that on behalf of people who are not members of DLAC. And so I think the first beautiful thing is that they have put out the list of who are legitimate lenders within their website. And so we are able to see who have identified themselves with best practice within that space. The second thing that happened is that the central bank itself said, now from the regulatory side, we also want to intervene. It wasn't the mandate of central bank traditionally to license digital lenders. It has not been. Yeah. And so it was really a proactive step of the central bank to go out of its mandate and define a new category of lenders that it is going to regulate. And that's why the amendment that we are discussing in Parliament now is the amendment to the Central Bank of Kenya Act, not to the Banking Act, because the Central Bank needed to introduce a mandate that it didn't have. And so this has been a very important step, and fortunately, quite fortunately, the Digital Lenders Association have been very supportive of the efforts of the central bank to legitimize this space. And so the central bank amendment bill now is requiring that every participant in the digital lending space be licensed by the central bank, even though they are not deposit taking, which is really, I think, revolutionary. And for the digital lenders to say that's acceptable, I think it shows that even digital lenders are really above board in this space, especially those who are credible. And so it's very soon we are going to be able to shift to sift those who are truly best practice players and those who are not. Before I let you go, finally, as an association, I mean, what is your position on the CBK Amendment Bill 2020? The CBK Amendment Bill is well intended. It was revolutionary to the extent that it was not traditional for the central bank to be involved in this. I think the most important caution that everybody is giving, and we support that caution, and the central bank accepts that caution, is that by regulating this space, it is not going to interfere with the innovative capabilities, and this space is a very innovative space. Regulation can sometimes block or stall innovation. And so that's the only concern, and Central Bank has been very, very alert to that concern. And as it takes over this responsibility, we are assured that it's going to allow the innovation to take place. And Central Bank is known for its support for innovation. It has demonstrated that in the past through the way it supported the M-Pesa innovation, and also through the various fora at which it organizes support for innovation. So we support the bill.
Anything else?
Well, it's just to say that we as consumers need now to start seeing credit bureaus as being our ally. We traditionally see credit bureaus as places where our negative data is being posted. And, you know, if you start thinking negative, then there's something wrong with you in the first place. All our data is being submitted to the bureau when we pay and when we don't pay. And so when you look at the database of the credit bureau, you will find that the large majority of the entities or individuals whose data is sitting in the bureau are positive. They are highly rated. And so we all need to support the credit bureau system so that our negative information starts transforming into positive information by paying up our loans so that our scores can improve and we stop demonizing these credit bureaus. And
of course, it also it calls upon credit reference bureaus, to also come out and tell people, hey, look here, you're not just in position of your bad information.
Right.
We're also in position of very good information about you.
Exactly.
Very well. Thank you very much, Jared, for finding time to be with us this morning.
Thank you very much for having me.
Appreciate it.
Thanks.
Jared Getenga is the CEO of Credit Information Sharing Association of Kenya, joining us this morning to help us understand the governance of data and the sanctity of data in this country. And of course, you have listened to him. My name is O'Brien Kim, and this is Base Check. We are live from Broadcasting House. Our next topic is coming up next, and we are focusing on food security in relation to the drought that the country is going through. What are the mitigation measures? Stay right here.